The U.S. Bureau of Labor released their data on Tuesday, showing that inflation in the U.S. has cooled in August, but a wide slew of goods and services still saw price increases. Core inflation in the U.S. also rose, sparking concerns that the Fed could continue with their aggressive rate hikes.
U.S. Bureau of Labor data shows annual inflation in the U.S. eased to 8.3%, lower than the figure back in July of 8.5%. This was mostly due to a drop in gasoline prices, which fell by 10% compared to the previous month. However, a slew of other prices still rose in August, showing that inflation in the U.S. is very broad. Food prices continue to soar, with chicken prices rising by 17% and egg prices by nearly 40%. Meanwhile, grocery prices rose by 13.5%, the biggest annual increase since 1979. Meanwhile, core inflation, which excludes highly volatile food and energy prices, was still high at 6.3%, higher than it was in July, and exceeded analyst expectations, thus igniting fears of aggressive rate hikes by the Fed and raising the risks of a recession. And as you can see here, core inflation in the U.S. rose in August after previously dipping in June and July. Also not far from core inflation in March of 6.5%, which was the highest level so far this year. In August, core inflation surged due to high housing rental prices, higher medical care costs, and new car prices. And amid high core inflation and higher prices of everything from food to groceries costs, markets are still widely expecting the Fed to raise its benchmark interest rates by 75 basis points at the end of this month.